Hey, what's up everybody? Monday, President's Day. Market was closed February 17th. I did send out my new issue of MMT Trader. If you want to get a copy of that, go to my website, sign up for a 30-day free trial. You could click on the link right here in the description below. Remember, I'm the only one who has an applied approach to MMT. I take the concepts and understandings of MMT and I use that to trade and invest in the market. Nobody else does that. A lot of academics out there talking about MMT, posting up comments on Twitter or on blogs, writing papers. That's great. I'm not knocking that, but nobody has an applied approach to MMT when it comes to trading. And that's my background. 40 years in the market. I've been a member of 4 exchanges, a floor trader, managed money for a major hedge fund, and also a major international bank. You know my story. So what's going on, everybody? What is going on? The data this week, when I look at fiscal, is still positive. All right, it has not flipped over. I've been talking about the growth rate in the tax flows compared to the growth rate in the spending, and that tax flows growing at a faster rate than the spending, but we still have more spending going in than taxation. But that, if you look at the rate of growth of both of those things, that's going to flip soon. I don't know when, but soon. But right now, the fiscal situation is still positive. The bank data in the latest week, ending February 5th, good, looking good. I was surprised. No slowdown there. Nearly all the metrics were higher. Loans and leases were higher. Commercial real estate, very strong. So, yeah, the bank data was definitely positive. Bank deposits up 40 billion. That was a nice increase there. I like to call that the cash on the sidelines, right? Whenever you hear that term. Hey, there's cash on the sidelines, cash on the sidelines. Now, the market sentiment is leaning bullish. We saw that last week in the AAII weekly sentiment survey, that there was a high level of bulls, low level of bears. The neutrals popped up. I talked about that in a video I made. I said I found it to be interesting that, in January, the neutrals, they all jumped off the fence and they ran into the market when it ran up. Remember last year I said they waited and they waited and they waited. You had so many opportunities to buy the market last year. I kept saying every single correction, buy the market, buy the market. The neutrals stayed, the neutrals stayed. Finally in January they couldn't take it anymore. They saw the trade deal with China was being done. They jumped off the fence and they came in. Normal. Then we had that correction based on the coronavirus scare. And but this time, curiously, I have to say, when the market ran up to a new high, this time around in the latest week, they jumped back on the fence again. They didn't want to follow it up. So there you have it. Let's talk about gold. Commercials in the gold market are, they've been selling futures. All right, they are the most short in, I believe it's about 7 months, maybe longer. I have to go back and look at my data. So the commercials, all last year they were buying. Here's another example. Gold, all last year and the year before, going back to 2018. And I remember I had subscribers, they're like, my gold's never going to go up. It's never going to go up. They were crying, it's never going to go. I said, don't worry. Commercials are in there buying. The commercials know. They know the value. Not to mention the fundamentals itself. Low falling mine supply, no new development, all this stuff. Central bank buying. And what happened? Commercials were buying since 2017, 2018, 2019. Now they're selling up here. It doesn't mean it can't go higher ultimately, but they see this as, and by the way, remember, what was it, back in 2018, you had several big mergers of major mining companies, all right? And that was when the price was in the 1200s. And these guys were saying, look, these mergers make sense. These acquisitions make sense. It's cheaper to acquire gold reserves through an acquisition than to mine for the stuff. And they were saying that these acquisitions were good at a price based on a price level of $1,400 an ounce, and they were buying it when gold was at $1,200. Anyway, long story short, they're selling right now. Commercials in oil who were long, and they're still net long, but in this last week, ending February 11th, was the first week that they were net sellers. Okay, so this little rally we had up to 52, they were selling. Commercials were selling. They're still net long, so it's probably going to go a little higher, but they're starting to unload now. They're starting to unload. So that's it. Dollar keeps going up. Euro is very... Oh, by the way, Japan. I mean, they raise taxes in a weak economy, and guess what? The economy contracts at a rate not seen in the last 6 years. I mean, a very sharp contraction in the economy. They raise taxes. This is classic. Japan has bought... Let me say this. Japan has bought into this whole erroneous argument, this fake brand of economics, you know, where we have no money. We ran out of money. This is the Western junk economics that's taught in all the business schools here, and they buy into this. They believe they're out of yen. They have no ability, so they raise taxes, and the economy is going down the tubes. But interestingly, the yen hardly reacted to this. So that's what's up. Today was a quiet day. Of course, there was markets were closed here in the United States. We'll see what happens this week. So basically, conditions are still bullish. You have sentiment, I would say, leaning bullish, which means you take a kind of a contrarian view. It could be a pullback here, but you still got to buy the dips at this point because economic conditions are still bullish. But I'm monitoring those things every single day. And my subscribers get that information every single day. All right, everybody. That's it for today. I hope you had a nice day off, if you had a day off, and see you tomorrow. Bye-bye.